So then the next thing is, just remember, there is no right or wrong with this quiz. This is just a starting point. What you will keep in mind when you're doing this is that this is base, right? So at the end of the year, we'll have you take this quiz all over again to see what you've learned. It will also keep you motivated to keep working through each quiz, if you want to call it that, for each month, or each task for each month. So tonight, what I'd like you to do is grab a glass of wine, a piece of paper, a pen, and define your goals. What are you thinking about in your head would be your little goals and your big goals. And remember, this doesn't have to specifically be something that is in your mind financially related. Just write it down. Little goals, big goals. Ask yourself the following question. If money wasn't a barrier, what would you want? So don't let that be a limitation. This provides motivation for controlling impulse spending. I'll tell you, if you've ever planned for a big vacation, it seems easy to save for that vacation and not spend in other ways because you're motivated. It also helps you set a budget for the year, which is really important. So then the what? Make sure that those goals are clear, make sure the description is clear, and the reason you want it. What's the emotion behind it? Money is very emotional. So what's the emotion behind it? Target amounts, target dates, how much you need to save. A plan for freeing up cash is really important. And then also post it in several places. Some people actually wrap it around their credit card to make sure that the goals are really defined and they don't use their credit card for different things. This takes about 2 hours once a year. So in January tonight, grab that glass of wine, pen it out, know exactly what it is that's most important to you. Then maybe this weekend, get organized. This is one of the #1 reasons why people feel very frazzled about money, because they don't have an organization system. For some, it's pieces of paper, and this is your very first true blue task of the year. So they want that traditional filing system. So a 2-drawer filing cabinet or a 4-drawer filing cabinet, that's perfectly fine. I'm a cloud-based person. I want to be able to scan it, get it off my desk, shred it, know exactly where to go to find the paper in the future, and pull it up from any place that I need to pull it up from, because most people are able to pull it up from their mobile devices or tablets or whatever they might use anymore. So it's completely up to you. It doesn't really matter, but make it easy for you. You can have a folder for each company, or you can have a file by category. Again, whatever's easiest for you, that's your first task. That usually takes about 1 hour a year to set that up. So we just want you to do that sometime in the month of January. Set aside, I call it a money date. So set aside 1 hour on your calendar where you're going to make this financial improvement in your life to get organized. If you're already organized, great. Then you can take the rest of the month off just knowing that you have your goals done. The next thing in February, what we would like you to do is, with all of that stuff that you've gotten organized with, is to create a net worth statement. This can be very emotionally stressful to a lot of people because they're just trying to put together how to do that. So the first thing you want to do is list all of your assets. I use Google Sheets. So some people use Excel, some people use a piece of paper. But just list all of your assets on one side or one column. And I list it by account. So I have Amy Irvine Roth IRA, Amy Irvine Traditional IRA, Amy Irvine Retirement Plan. And then I have all of my husband's stuff. I list our house. I list any land or property. I even list our vehicles. So I list all of our assets, big assets, on one side of the document. And then on the other side of the document, I list out any debts. So do you have student loans? What's the balance? What's the interest rate? What's the payment? Then do you have a car payment? What's the amount that you owe on the car? What's the interest rate? What's the payment? Do you have a mortgage? What's the mortgage balance? What's the interest rate? What's the payment? So that goes on the other side. And then we subtract all of that debt from our total assets. Now, when you're just starting out, especially as an attorney, when you're first starting out, one of the things that we often see is that there's negative net worth. That's not atypical because you are just starting out. So you have a lot of debt from going through law school, and now you're just starting to put your assets together. So what we're trying to do is to show people that that number is going to change in the future. This is the first year that you're doing that. So next year when you sit down to do it, you should see your net worth increase. Even if it's still negative, your debt should be paid down, your assets will go up. And then create a spending plan. And we don't call it a budget, we call it a spending plan. We want to know first, how did you spend your income last year? And then to ask yourself the question, is that how you want to spend it? So how do you want to spend it this year? Don't forget to plan for things like your next holiday, travel, the fun stuff in life as well. As, okay, if you want to get out of debt, let's look for areas that we can cut out this particular year so that you can reduce the amount of debt that you have. It's whatever you want to spend your money on. Of course, some of it is required, but it is sitting there and intentionally allocating your income to those particular resources. We then like to look at how much you're spending on things like your home and your auto and your other debt. We look at it as a percentage. So remember, I had you list out all your assets and I had you list out all of your debt. Now we want to look at it from a ratio perspective. So if you make $100,000 and your mortgage payment is, let's say, $1,000, well then, and that includes escrow, let's say. So if you looked at that ratio, you'd be saying, well, I have a debt to income ratio on my mortgage of about 1%. And then do it for your auto, and then do it for your student loans. What we like to see is that your home expenses, including your insurance and your taxes, is less than 30%. Sometimes as much as 40%, but ideally less than 30%. So you're spending less than 30% of your income on your home. We prefer to see auto less than 10% and student loan less than 10%. So just to recap that, we take your payment and we divide it by your gross income. That's also what bankers would be looking at. So that's February's task. Looking into March, the fun month of taxes. When I talk to people about uncorking their finances, I actually tell them to grab a quart off the shelf because taxes just requires that much alcohol. And I joke about that. I don't actually suggest that you drink a quart while preparing your taxes. However, maybe afterwards. As the documents come in, we suggest that you keep a file folder for those specific documents. We always tell people to label it the current year tax document. So whenever things come in the mail, because it's often in piecemeal, just throw it in that folder. Even if you don't open it, just throw it in that folder so that when March comes along, it goes back to that get organized idea. When March comes along, you can take that folder and now you can start to prepare the taxes. Remember, the big changes that started in 2018 were past that by 1 year, but there was no exemption. The standard deduction was pretty much what everybody was using versus itemized. And the limits for 2019 are listed there, 12,002, or the standard deduction for 2019 is 12,002. For head of household, it's 18,350, and for married, it's 24,400. If you have a child under the age of 17, you can take the child tax credit. And if they're over the age of 17, you can take the non-child tax credit of $500. This is something that we tell people to plan on about 2 to 3 hours. So somewhere in the month of March with your money date, just set it on the calendar that you're gonna work on it for about 2 to 3 hours. Many people will do it on their own through like a TurboTax or a tax act or something like that. But if you are working with a tax preparer, just plan on giving them approximately that much time to participate in the completion as well. So then we move into April, and in April, what we want you to do is take a little bit deeper dive on those assets and do an investment review. Do you have a bucket list for each of those different investments? Meaning, do you have money set aside for retirement, money set aside for possibly your children's education, money set aside for purchasing a house? Do you have different buckets that you're defining your money in? Those different buckets should have different timelines and should be allocated differently. So in the case of taking a risk, look at allocation, what we suggest is that you use this link to take a little bit of a quiz and take it separately for each bucket. Does each allocation match your risk bucket? If you have a 5-year goal on something, it's going to be much less aggressive than if you have a 30 or 40-year goal. The other thing is, how do you compare your returns to other indexes? We suggest that you go to Morningstar. We like to send people to Morningstar, free website. You can go out there. You can look at how your investments are returning compared to the S&P 500, compared to the New York Stock Exchange. We do not recommend that you compare your investments to just the Dow or just the S&P 500. And for those of you that don't know, the Dow Jones number that you hear, the index that you hear, is actually made up of 30 stocks. So when we look at that and you think about comparing your portfolio to just 30 stocks, it's not sufficient enough. So we want you to look at the indexes, and we really like target dated funds. So if you have a goal that's going to hit in 2025, we suggest that you look at like Fidelity or Vanguard's target date 2025 or something along those lines, types of funds. Very focused on the fact that your goal is going to happen at that point in time. And know your fees. That's again something that you can find out on Morningstar.com. Great resource for you to look and see. And then also know how each account is taxed. Do a little bit of research about how each account is taxed and make sure that you have different buckets. One of the things that we find with retirees is that they come to us and the only bucket that they have is all the 401k money that they set aside. So it's all pre-tax. And the idea of that was, well, they're going to be in a lower tax bracket when they retire. But in reality, their lifestyle is very similar in retirement as it was in post or pre-retirement. So we're withdrawing money from pre-tax money that they actually probably could have put away in a lower tax bracket. Our dream is that you have a third in Roth, a third in pre-tax, and a third in brokerage or after-tax money. That's our dream for clients. So if we're working with a couple that's in their 30s and 40s, that's what we're trying to do for them, is get them set for that. That one does take about 2 to 3 hours as well. So again, put your money date on the calendar for April and get that completed. And just a little tip, my husband and I have a money date once a month, and we go through all of these steps together. I walk him through where we're at, show him where everything is, and he very much enjoys learning more about it every single time. His favorite part isn't the data, collection of it, but it is great for you to sit down with your significant other to do this as well. So in May of 2020, we'd like you to dig in with the life and disability insurance review. So we want you to sit down and look at what you have for disability insurance and what you have for life insurance. You have a 1 in 4 chance of being disabled at least 3 months in your life. And so that's a pretty big percentage at 25%. So the other statistic that we like to share sarcastically is that according to actuaries, you actually have a 100% probability of death. We hope it's much later in life, but we know that everybody is going to at some point in time not survive. So those are two statistics that we always want to point out. And the younger you are, the more important it is to really have that disability and life insurance taken care of. Are you taking advantage of all the benefits at work? That is one area that we often see when we're doing a financial plan that people don't even realize they have as an option. It's the benefits at work. Are they maximizing their disability? Are they maximizing their life insurance? Most plans give you options to increase the coverage that you have at your cost, but compared to going out and having it underwritten individually, it's much, much cheaper. Now, the downside is if you leave that company, it's usually not portable. You may need to have some supplemental insurance. This depends on your age, your goals, and your debt. And we want you to prepare a summary of your current coverage. So similar to when you did the net worth, we want you to sit down and actually write down what would you get if you became disabled. You would get something from disability through work, maybe not. You might get Social Security if you're disabled for a long enough period of time, or it looks like you're going to be permanently disabled. But where would the gap be? Would that cover your bills? Do you have enough in emergency funds that would cover your bills? So prepare a summary of your current coverage and ask the question, would that be enough replacement income to support your family? And if not, that's when maybe you need to go out and look for some coverage. A lot of times through the association, through the bar association, you can actually pick up through group discounts, different packages on some of these things. So again, do your homework. That takes probably about 4 hours out of the course of the year. Moving into June, we want you to start thinking about retirement projections and planning. No matter what your age, we need a blueprint. You should start saving for retirement the day you start working. And some people say to us, well, I can't afford my student loan and saving for retirement. We want to figure out a way for you to do that because it is super critical for you to start putting money away for retirement as soon as possible. And then you have to be thinking about, what does retirement look like? And for some people, it's a phased retirement. Like, I love what I do, so I plan on working for a very, very long time. Yet I don't know that I'll continue to work as hard, so I'll start to phase out. But are you going to travel? Are you going to volunteer? Are you going to relocate? What will you be spending in retirement? Will it be similar? Will it be less? Will you work part-time? What assets and income will you have in retirement? And then where's the gap? What can be done? And again, remember what I said about in April, make sure you diversify your assets, not just in the investment, but that third in Roth, third in pre-tax, and third in brokerage type money. We want you to map this out, and this takes a good 5 hours. So plan on about a 5-hour thought process around this. You have to start with where you're at, look back at the budget to see where could you cut if you aren't saving any money. And I call it a budget. I know it's actually a spending plan. But then also start thinking about, what would be the gap and what would be realistic timing on when you can retire. There are all sorts of programs out there. Fidelity, Vanguard, both have systems where you can plug in some information and they'll tell you how much you should be saving in retirement. We typically tell people we want them to be saving somewhere between 15 to 20% for retirement. And that could be a combination of both their money and their employer's money if they're so fortunate to get that. In July, we want you to start talking about the debt. We want you to start talking about debt reduction. So in February, when I talked about that whole net worth statement, did any debt stand out? Is any of this keeping you up at night? What could you do to get that debt down? We say get financially frisky with your debt. What are the options? And don't forget to analyze how that debt got there. That's a really important part of it. Sometimes we look at consolidation. Is that an option? Will that get your payment, even if it's the same amount, collectively, will that get the debt paid down quickly? What if we do a snowball? This is where we list all of your debt from the smallest balance to the largest balance. And you pay the minimum on everything except the smallest balance. And you try to put a little bit more on that smallest balance. And then when that balance is paid off, you take what you were paying for that smallest account and you apply it towards the next one. And you keep doing that until eventually you have that one debt left that you're putting all the money that you were putting on debt on that particular one debt. And then there's also the avalanche, which is where you list all your debt from largest interest rate to smallest interest rate. We tend to promote the snowball because it does keep people motivated. They're seeing things paid off quicker because you're paying off the smallest debt first. And we apply this sometimes to student loans as well, because you may have taken out some undergrad loans that were restricted on the amount that you could take out. So they're less than the graduate loans and the law, when you went to law school, those loans might have been much larger. So we want you to start from the smallest and just pay the minimums on the rest. Sometimes that also means trying to figure out if there's any student loan forgiveness that can be applied to some of those loans and looking at that as well. This again is probably going to take about 4 hours for you to work through. Again, lots of good resources. If you Google Snowball or Avalanche, there's lots of good spreadsheets out there that are pre-built that you can use if you want to try to do it yourself. In August, right up your alley, we're going to be talking about legal documents and reviewing of those legal documents. Do you have any of them? When were they last reviewed? Remember a couple, I mean, we always talk about wills and medical power of attorney and financial power of attorney, but really, really remember the HIPAA. If you have kids over the age of 18, you want them to have a HIPAA document on file. So if they become ill, that you have the ability to get the information. And I say every single year, review your beneficiaries on everything: your life insurance, your retirement, your brokerage account, even looking at your potentially your Taunton trusts on your bank accounts. These are things that you should be reviewing annually, because some of this stuff may have changed. And we don't think that usually from year to year it has, but little things can certainly change. And so we want you to take just about 2 hours to look over that stuff in the month of August. Then in September, we want you to look at home, auto, and umbrella and professional liability insurance. What coverage do you currently have? What is the risk associated with that? Ironically, in the state of New York, it only requires for $25,000 and $50,000 for bodily injury and liability on auto policies. Would that really be enough if you were sued? What are your income and assets that are on the hook in that situation? So looking at those policies, sitting down with your agent, that's part of their job, and talking about what you have that would be at risk to see if you need to increase that. When we all first start out, we don't have a lot that we're thinking about protecting, but the piece that people forget is the income piece. So make sure that you have enough liability coverage on both home and auto, or even renter's insurance. If you have kids, you really want to make sure that you have enough, because you're still responsible in many cases. For most people, we do recommend a $1 million umbrella policy, and certainly we would recommend a professional liability policy for most as well. If it's been 3 years, go get new quotes and talk to the companies and have them educate you. Make sure that you're aware of what your coverage is. Make sure you're aware of what your coverage isn't as well. And the reason that I say that is because sometimes there's exclusions that are thrown in there that you don't realize happen. We had a client a couple of years ago that had insurance for flood, but she had a sump pump in her basement, and the sump pump was running so much that it actually burned out. And so the insurance company came back and said, oh, well, it was equipment failure that actually caused the flooding, and that's an exclusion. So if she hadn't had the sump pump in the basement, they would have covered it, but because the sump pump quit, they said it was an exclusion. So it's super important that you also know what it doesn't coverage. Rounding out into the last quarter of the year, October, generally open enrollment period. We say that we see that most people only spend about 15 minutes on this process. We want you to spend more time than that. We want you to understand what benefits you have and how each of them can enhance your life. I do a whole other webinar on stop treating your employee benefits like products, because digging into everything that you have available can save you a lot of money over time. What do you need for health insurance? Can you save in an HSA, pay lower premiums, or do you have some medical conditions that higher premiums make sense? And digging into that a little bit more is really important. We also want you to take advantage of low-cost plan options that are available. Like I mentioned earlier, life insurance, disability. Sometimes they have legal plans that you can sign up for. Sometimes there's accidental death and dismemberment. Of course, we want you to be involved in your 401k plan and potentially, if not your HSA, your FSA. How much life and disability can you elect? How does that help your family? And as I mentioned, look back in May to see what your needs actually are. Spend 2 hours really getting to know your benefits here and signing up for the right ones. In November, we want you to go back to looking at tax projections. And this is because, remember in March we were saying file your tax returns, but usually once December 31st hits, other than IRA contributions, there's not much you can do to change your tax situation. It is what it is. So run some projections. You have time to prepare if you're going to owe or possibly implement a tax strategy to reduce your taxes if you do. The only fix after December 31st, as I mentioned, is the possibility of a tax-deductible IRA, but not everybody is eligible for that. Make sure you're withholding enough too, but not too much. We don't like large refunds. We want a couple $100 back or a couple $100 that you have to pay. We don't like to give free loans to Uncle Sam. We want you to be able to utilize your money for some of your other savings goals. So spend about an hour and a half, gather the data that you've withheld from your paycheck so far, look at where you were at last year, kind of do a side-by-side comparison and see where things are at to make sure that you're not going to owe a big tax bill. And if you have a brokerage account, we recommend that within that brokerage account, you use exchange-traded funds so that it doesn't give you surprise capital gain distributions. It's fine to use them in IRAs or Roth IRAs or retirement plans, but those exchange-traded funds don't push out capital gain distributions like mutual funds do at the end of the year, so there's not those surprises. If you do have mutual funds in a brokerage account, you should start asking those companies what the estimates are for your holdings so that you can incorporate that into your tax projections. Then in December, we say celebrate and find some financial peace. You've worked hard throughout the course of the year to get everything together. However, we do say second verse, same as the first. We want to know if your money did work for you the way that you wanted it to. We want you to start thinking about 2021, defining your next set of goals, reviewing how far you've come, and then ask the question, what kept you motivated, and celebrate your success. So that was the basically 30 minutes of the 12 steps of financial planning in a given year. We, like I mentioned, do spread it out over the course of the year so that it doesn't seem so overwhelming. And I'd love to take any questions if you have any. Just let me know. I'm checking the notes right now to see if you have any questions. Okay, great. Doesn't look like there are any at this point in time. I'm going to hang out for a few minutes. If somebody does have a question, feel free to let me know, and I will be glad to answer them. Thank you for joining me today, and hopefully I will see you all soon. This is part of a webinar or series that we are actually doing. So if you have a particular topic that you'd like to know about or know more about, or you'd like me to dig in, please let me know. Thanks, everyone.